Hey everybody, Tom Berry with Investor Loan Source. This will be the second edition of a four-part series that I'm doing on kind of the outlook and what we see in the marketplace right now as we get through the tail end of this COVID-19 pandemic and get things opened back up again. So we are mid-May now, and things are starting to open up. You can actually go eat in a restaurant now, albeit at a tighter capacity. But we're starting to see a little bit more traffic. Haven't seen any traffic jams yet, but things are starting to get back to normal. And the question remains, what is this going to do to our investments? If I have some money sitting in a self-directed IRA or sitting in a bank account, or what should I be doing with that money? So let's talk a little bit. In the last installment in the series, we talked about stocks and we talked about several different asset classes of physical real estate. I want to talk this time about a concept called private equity funds. And I want to first preface this by saying this is not a solicitation for investment. I do manage a couple of private equity funds, but I just want this to be more of an educational thing because a lot of people, quite honestly, don't know what a fund is or what it does or why you might want to look at it as an investment option. Private equity funds are nothing more than professional management managing a pool of money in a particular type of investment vehicle. So for our private equity funds, we manage real estate notes. And our fund is also designed so that we can also manage physical real estate with it. Now, the way we set that up and why we set it up that way is that I believe there is a season to buy real estate and a season to sell real estate. I am a market cycle investor. I don't like to buy at the high, and I certainly don't like to sell at the low. But I will certainly do the opposite every opportunity I get. So what does that look like? Well, when assets fall, when the price of assets fall, that's when we want to buy them. Would you agree? You always want to buy when they're low, okay? And then we'll ride that to the top, or as close to it as we can gauge, and then we'll sell them at the peak. This is exactly what Melissa and I did with single-family homes when we were buying back in 2008 and 9. It's what we did with apartment complexes when we were buying in 2011 and 12, and we sold those apartments off in 2016 and 17. Okay, you buy them at the low, you sell them at the high. Well, how does that work in a real estate fund or a private equity fund? Well, it works very easy, because what we've done is when we couldn't buy real estate because we felt the prices were too high, we've taken the money that was invested with our investment partners and we bought real estate notes with it. Notes are a great placeholder for the money until the prices on real estate get cheap enough to jump in. And for the last several years, while we've had our funds, we've just been buying notes. Well, folks, let me tell you, I think over the next 6 to 9 months, we're going to start seeing a shift in our funds, and we're going to start buying physical assets because I believe there's going to be some bargains to be had. So what are the benefits of a fund? It's real simple. Professional management. You don't have to go out and understand everything about the assets that you're investing in. You invest with a team that you trust to do those things for you and with you. Of course, we send out quarterly newsletters to let our investment partners know what we're thinking about the market and let them in on some of the research that we're doing. But by and large, we're doing the heavy lifting. We're doing all the research. We're doing the surveys and the analysis. Then the second benefit to a fund is having the diversification of multiple assets. So when you buy an apartment complex like Melissa and I did back in the day, our money was in one complex. If that was a great buy and we made some really good ones, that was great. If it was a bad buy, and we made some of those too, that was not so great because you've got all your cash or a lot of your cash invested in one. In a pool or a fund, you're investing with other people over a variety of investments that all kind of look similar, but they're not. So a couple of bad apples don't ruin your entire investment portfolio. In fact, those are typically a bump in the road that you don't even notice. So professional management and diversification are the two biggest benefits to private equity fund investment. If you'd like more information, keep watching. We got 2 more videos to send your way, and if you'd like more information, we'll be happy to get it out to you.